Hey traders, so in this video, I tested the MACD divergence 100 times. And don't get it confused, the MACD divergence is very different from the MACD crossover. It still uses the MACD indicator, but instead of going long and short based on the crossovers on the MACD, you go long or short based on if a divergence happens. So why am I testing this method? Well, it's because the MACD divergence is actually a really popular strategy. There are many videos and articles that teaches you how to trade the divergence, and I don't want people to blindly follow a strategy that may or may not work. So now, I'm here to expose the true win rate of the MACD divergence strategy so that you don't have to risk your hard-earned money testing it yourself. First of all, what is a divergence? So we all know that the MACD is an indicator that is based on trend and momentum. Usually, when a price is on an uptrend and have a strong momentum, the MACD is also heading in an upwards direction. And when the price is on a downtrend while having a strong downwards momentum, the MACD is also heading downwards. But there are instances where the price is indicating an uptrend and forming higher highs, however, the indicator is actually heading downwards and forming lower lows instead. This is called a divergence. It is when the price of an asset is moving in the opposite direction of a technical indicator. A divergence is created to warn that the current price trend may be weakening. In other words, it's a signal that detects a possible reversal. Remember, a divergence can happen in any indicator. It's not exclusive to the MACD. There are also divergences in the RSI, oscillator, money flow, but in this video, we are testing exclusively the MACD divergence. So, there are two types of divergences: a positive divergence and a negative divergence. A positive divergence is when the price is moving lower and forming lower lows, but instead, the indicator is forming higher highs and showing bullish signals. So if you detect a positive divergence, it means you are looking to take long positions. Similarly, a negative divergence is when the price is moving higher and forming higher highs, but the indicator is instead forming lower lows and showing bearish signals. So, if you detect a negative divergence, it means you are looking to take short positions. So, you can see in this example, the price displayed a downwards movement followed by a strong reversal to the upward side and is showing a clear uptrend while forming higher highs. However, you can see that in the MACD, if you created a line from these two tops, the indicator doesn't support that it's forming higher highs. Instead, it's forming lower lows. That means this is a negative divergence. And a negative divergence means that you are looking to go short. You enter a short position here, at the top point where the divergence happened. In this specific situation, the trade ended very well. We almost timed the top perfectly. Well, this is when the divergence is actually working properly. But there are times where it doesn't. You see, a divergence is used to detect reversals. And if you're looking for reversals, it means most of the time you are actually trading against a trend, which may not be a good idea. Like this example here, you can see in this divergence, the price displays higher highs and is heading to the upward side. But if you see the actual indicator, it is forming a lower lows instead. So this is a negative divergence, meaning you should take a short position here. Well, this is where the divergence didn't do a really good job. Since we are aiming for a reversal, it means that we are taking a position against a trend as shown here. And if you took a short position here, that would result in a loss. But this indicator is largely promoted towards beginner traders, so I need to test it out for myself and reveal, is this indicator actually worth trading? So, because a divergence is very hard to spot with the naked eye, I am instead using this indicator on TradingView called MACD with divergences. It really helps me spot divergences in the MACD indicator by giving me signals like this. So here's how I'm going to backtest this strategy. So for my entry signal, I am going to go long or short based on the signal. If the signal is indicating a bull sign, it means I am taking a long position. And if the signal indicates a bear sign, then I'm taking a short position. Now for my exit signal. So for this backtest, there are 3 conditions for me to exit a trade. My first condition is when the price hits my stop loss, which would be a maximum of a loss of 13 pips. So I'd only receive a max loss of 13 pips. So why did I choose a tight stop loss? Well, it's because trading reversals is very risky since we are going against a trend. So I don't want to hold a position against a trend for too long, because if a trend actually continues instead of it reverses, I'd lose a lot of money. My second exit condition is when I hit my take profit target. So my take profit target will always be at 20 pips. So why did I maxed out my profit to only 20 pips? Well, it's because I don't want to lose my profit because of a late exit. I'd like to take my profits quickly because again, trading against a trend is very dangerous. And yes, I would miss rallies like this, but in exchange, I would receive a less risky and more consistent profit. My third exit condition is when the indicator displays an opposite signal. For example, let's say the indicator displays a bull sign, meaning I would take a long position. If the indicator displays an opposite signal, in this case a bear, before the other 2 exit signals were met, I would close my original position and enter a new position based on the new signal. And there are often times where the indicator displays a double signal like this. For example, let's say I took a long position. If the indicator displays another long position before displaying the other 2 exit positions, I would not do anything with my position and continue to let it run until one of the exit signal appears. So these 3 conditions can happen without order. So whichever conditions happens first, that's when I close my trade. So I'm going to record my backtest using this Excel sheet that I created. I'm going to be trading with a starting capital of $10,000 with 200 times leverage per trade, but I'm only taking positions with 1% of my capital so that I would not blow up my account. I am also trading the Euro GBP 30-minute chart and the Euro JPY 30-minute chart. So here's a time lapse of me backtesting the strategy. You can skip to the timestamp shown in the screen to see the results. So, after backtesting the MACD divergence 100 times, here are the results. We received a win rate of 46%, which translates to a whopping $511.25 profit, which may seem little, but remember, we are only using 1% of our capital per trade. If you want to step it up and make it 5% per trade, we would have made $2,694. Which is 26% profit from our total capital in about 1 year, which is a really good return. And remember, this is only from one indicator. You don't have to trade this indicator specifically for the rest of the year. You can just trade it when an entry signal appears, while you focus on other trade opportunities. When backtesting, I missed out on tons of huge profits because of our take profit limit, but there are also times where a trade goes in our way and ended up reversing, but because of our 20 pip take profit, we managed to close the trade before the price reverses again. Remember, this success isn't only from the indicator itself. Our risk-reward ratio also played a huge part on this win, and I found this strategy best with the 30-minute time frame. I am genuinely shocked that a strategy that goes against a trend actually performs better than most strategies that goes with a trend. We also tested other indicators on this channel. You can check those videos out as well. I literally just gave you a potential winning indicator, and all I ask for in return is just subscribe to the channel and give a thumbs up on this video. It literally takes only 2 clicks to do it, and it really means a lot to me. So thank you guys for watching, and I'll see you guys in the next video.